So yesterday I did a quick post saying why did I buy gold at that level, which was around here. So I'll explain one of the reasons why I took this gold position. So just based on this structure here. So, but last week when gold was consolidating around this zone, there's one thing I want to show you. So we have these liquidity levels which I normally show you. So I say, okay, whenever you see like liquidity levels like here, then we have this accumulation phase. This is where institution add positions. So you see in this weak area here, this is where we had that big liquidity level, right? Then when you pull this to when you see this blue psychological level here, you see, okay, price came here for liquidity, went to the upside, collected more liquidity, then broke to the downside. We had this meltdown. Then when you see price coming to this level, it tried to collect liquidity, then it fell the first time. It tried the second time, third time it fell. So when you saw this price action here, we see this big move to the upside. Then we see buyers were trying to push the market to the upside. Then we see aggressive selling. Then we see this uh, candlestick close. So one of the things you look at, you see this wick below, this one shadow, this tail. When you see the other red candle close past this week, then that was a very good selling opportunity to the downside, right? So the same opportunity presented itself around here. We see we are in this good demand zone here. You see all these liquidity points here. We're in this good demand zone. Price rejected one, two, three, four. Then when price came here, it rejected once, two. Then we had this liquidity level. Then when you break this down in 5 minutes, 5 minutes time frame, what do you see? We see around here. You see price was like collecting liquidity, to the upside. Then what happened? We see break of structure around here. Went to the upside. Then we see this retest here. Then what happened there? Just market went poof, creating high, low. Then we had one more fake out to the downside. Then we had this big upside. Our first target got hit, second target got hit, the third target got hit. This is just based on liquidity levels. So that's the biggest levels, biggest thing that when I saw this, I was like, I'm gonna take this opportunity. And when you look in, so when you spot this kind of markets, you see like this liquidity, price rejected here, and also we had this aggressive selling opportunity here to the downside. So that was key. Like when a candlestick, when you have like this big rejection, you just have to wait for the next candle to close below the previous week. Then what happened? Aggressive selling. And here the same opportunity presented itself. We're in this weak area. Then what happened? Price just collected liquidity here in lower time frame, liquidity here. Then in lower time frame, we saw break of structure. We had this big move to the upside. So price, we had this nice fake out because it's following the trend line, and also we have like previous liquidity levels around here. So you see like this liquidity level around here. I'll draw it along there. You see, so you see around here liquidity level, and price came almost close to test that liquidity level before move to the upside. So in case, let's say, you got stopped out here because the stop loss was kind of tight, but whenever you see this kind of weak close, then you see price push to the downside, then you see price close here, the body closed here. What do? You wait for the next candle, like this green candle, to close above this previous open. Then when it engulfs this candle, you just take a position, it goes to the upside. So that's the same opportunity like here. When it closed below here, just to the downside. So that's the same opportunity. That's why I said this opportunity was fucking good. So wonderful for those who took this trade. Very beautiful trade. Thank you.